All right, let's bring on our next guest with Atlas Technology. It's Harry Tayjar and Matthew Tsai. Harry is managing partner and investor relations, and Matthew Tsai is a CEO from Atlas Technology, the latest in touchscreen technology. Welcome to the show, gentlemen.
Thank you for having us.
All right, my pleasure. Give us a little background on you, Harry, and you, Matthew, so that we can get a flavor for who we're talking to, and then let's move right into what you're doing at Atlas Technology.
Sure. Well, it's certainly an interesting time at Atlas, interesting situation. Mr. Matthew Tsai and Mr. Richard Lin are the two co-founders of Atlas Technology. They were formerly at the second and third largest touchscreen technology companies in Taiwan, and they were there until most recently, actually, when they decided to move over to the U.S. and essentially ride the coattails of Foxconn. This wasn't a knee-jerk reaction. This was a plan that was in the works for about 2 years when they found out that Foxconn was making this pretty dramatic move. And what I mean by dramatic is, if you can imagine, two things happening. Number one, never in our lifetime would we have ever fathomed that Chinese companies were actually going to move to the U.S. due to manufacturing. And that's exactly what's happening. A few reasons behind that. Number one is tax rates have gone down. They're lower actually here than they are in China. Number two, labor has gone up. And number three, the overall cost of doing business in China is more expensive than it is in the U.S., and partially because of the significant amount of subsidies that President Trump has given Chinese companies in moving over here. And how has he done that? Well, two ways. One, take Foxconn, for example. He gave them a $10 billion, I think that was a record number, subsidy just to move to Wisconsin. And second, he's charged quite a high tariff to Chinese imports. So the Chinese companies that want to survive really have made the decision to just join the U.S. and just move over here. Not only for the sake of saving money, but also the smart ones, because it brings them closer to the end consumer.
You know, I know that you've got your finger on the pulse of this. Give the audience an idea of how many companies you see that are starting to change this trend and make that initial move.
It's remarkable. You would think it'd be only two or three. It has actually been 20 of probably the 50 largest companies in China. Keep in mind, Foxconn was the single largest employer in China. And what's interesting, of course, is, as you probably know, how the Chinese government kind of likes to keep things under the lid there.
Yep.
They don't talk much about it in China every time I'm there. But here in the U.S., Foxconn's move was a significant move. And that's because you're taking China's biggest employer, and this is a country whose biggest problem is making sure that their employees are employed. And employing them out here in the U.S., obviously they didn't bring over their employees, but they did bring in their top talent, their top engineers, and their capital. So from that perspective, Foxconn was one of them. And add to Foxconn another 19 that I've counted over the last 2 years that have come out here. And that trend, honestly, is beginning to increase dramatically every year, every month, actually, that goes by.
Okay, let me drill down into this move that Atlas decided to make. Give us, if you can, some of the particulars of what was it wasn't just taxes or tariffs. That there had to be some other opportunities that they see that maybe U.S. investors haven't been able to see.
Here's why. There's obviously a big game plan here. The game plan is as follows, without divulging too much here, and that is, and Matt's looking at me smiling. And the game plan is as follows. We rode the coattails of Foxconn here because we do understand Foxconn is an 800-pound gorilla. We're a small company relative to Foxconn, but at the same time, we are by far the fastest growing. Why? We have the most number of competitive advantages, from quality to technology to service. Why? Because our two founders have served these exact same clients for the last 40 years, so they know who they are. So that's exactly why in the last 4 quarters, we were able to pick up Honeywell, Keurig, Kyocera in less than 3 quarters. Now, do they represent a big chunk of our sales? No, they do not. But do we anticipate them? I wouldn't be surprised that their current percentage of revenue today, which sits at less than 2%, is higher than 20% this time next year. And that's critical because the margins obviously have now ramped up from 34% to almost 40% just on the U.S. clients. Not to mention, I don't know if your audience noticed, but the average margin for a touchscreen company is in the low 10s, 11s. We're at 34% on the gross margin basis. So if you look at today's press release, for example, which will announce first quarter results or preview, once again, 5 quarters in a row, record numbers, double-digit growth, top line, bottom line, clean balance sheet, no debt. So we're not here to try to raise money. We're not here to try to grow with these convertible talks. We're here to grow conservatively but aggressively and systematically, and that's the strategy that Mr. Lin and Mr. Tsai have put in place. And so far, we've been playing it by the tee.
All right, Harry, let's take a break, and then on the other side, I've got more questions for you. All right?
Absolutely.
All right, we'll be right back with Harry Tayjar, Atlas Technology, Atlas Tech, INTL.com. You've been listening to CEO Money with Michael Yorba. This segment brought to you by Tycom Partners. We'll be right back. Welcome back to CEO Money. I'm Michael Yorba. Thanks for joining us. All right, this segment we're talking with Harry Tayjar at Atlas Technology. He is the managing partner, investor relations, and with him is also Matthew Tsai, CEO. All right, Harry, let's. Am I pronouncing your last name right?
Yeah, that's actually perfect. The one thing I do want to mention is that we are a publicly traded company,
Yeah.
and our stock symbol is ATLT, Apple Tom Larry Tom. And I wanted to just mention one thing, which is for a new company, which is pretty remarkable. I've been doing this for 20 years, and I've rarely seen this, which is this company got picked up by a new analyst just a couple of weeks ago with a buy recommendation at $1 stock price. Now, he did indicate if the company does decrease its total outstanding shares to almost 30 million or less than 30 million, then you can expect that dollar target to theoretically, obviously double at least, if not more. And what we did announce today was that it is imminent that we are going to do that, and we are going to do that probably by the end of this month. So you can expect that 56 million shares outstanding number to drop to less than 30 million. So if one does the math based on the earnings that we're projecting and the total outstanding shares, obviously we're going to be making a lot more than 1 or 2 cents a share come next quarter or come next year. So from a valuation perspective, there's no question that we believe that we are significantly undervalued. Having said that, for disclosure reasons, I will tell you at the same time, I am neither buying or selling the stock, neither is Mr. Tsai, because we're not allowed to.
Got it. Let's talk about the new product lines that Atlas has and you're developing.
Sure. So when I say technology, quality, superior technology, we're competing against some of the greatest companies out there, some of the biggest, largest companies out of Germany, for example. And I say Germany in particular because of Honeywell. We went head-to-head against this particular German company. I won't name them, but to develop the Honeywell thermostat. And I'm not saying the thermostat as a whole, but at least the touch screen part, which is fairly high-tech. And at the end of the day, we ended up winning to the extent that we have actually filed a patent for that particular screen. So as we speak now, we have 4 patents that we have filed for, with a plethora of additional patents coming in. So what does that tell you? It tells you that, the Chinese manufacturer that we used to think of is no longer the case. And now we're here doing what the U.S. used to do 30, 40 years ago, which is going with intellectual property and patents and capital. And that's what the Chinese are doing, which is they're coming into the U.S. with the same exact items and pretty much dominating.
All right. I get that. What you mentioned the patents that you filed, and they are for what?
They are for what's called touchscreen technology, obviously, but they're different types of touchscreen technology, resistive technology, passive technology. There are different types. So, for example, the first type of touchscreen technology that came out was the ability to touch a screen with 1 finger, then 2 fingers, then 3, and then, of course, Foxconn had the Holy Grail next with Apple, and that's really what exploded the industry. Now, the next Holy Grail, who knows what it's going to be? It could be display advertising, which is Samsung, what Samsung is doing. Now, what we're doing, which is a little different, is we are, without letting the cat out of the bag, we're doing something very interesting, and that is that we are using our growth capital to partner up with a household name. I won't say who, but it's a household name that you'll recognize, and we are trying to go after the smart home. Why? Because if you look at what, for example, what Samsung and ADT and all these other guys have done, is they've turned these old line alarm companies into new tech, high tech, touchscreen alarm companies. So don't be surprised if you hear about Atlas partnering up with one of these characters, and in doing so, don't get me wrong, we're not going to lose a dollar in doing that. Everything has to be accretive to earnings, and Mr. Tsai and Mr. Lin have made that very clear. So from an EPS perspective, keep an eye on us is all I have to say.
Okay, we will. We will definitely. All right, let's do this. We've got about a minute or two left. Any moving parts that you wanted to to let the audience know before we have to take off and wrap up the interview?
Well, I'll use this opportunity to let the world know that the Los Angeles office of Atlas Technology is aggressively, and I say aggressively, looking to hire a sales and marketing team of the highest caliber. And I'm talking about vice president or higher at Apple, vice president or higher at Foxconn. We have so much demand, without getting too excited here because we are a public company, but we have so much demand for our products that we can't keep up. We need sales and marketing. The reason we came out here was not to decrease costs only. The reason we came out here was to increase top line. And the targets that are out there, we're talking not hundreds, we're talking thousands. But we can't do that with two guys here. Do you believe that our second and third largest competitor have 2 and 3 sales agents in the U.S.? We're looking to build a team here. We're looking to stay in the U.S. for the next 50 or 100 years and really make a name for ourselves. And sooner or later, you're not going to only see the OEM's Atlas products. We're looking to begin licensing and producing private label Atlas products, which whose margins are going to be almost at 100%. So all I have to say is, please take a look at our financials, look at the performance, and if you have some time, please give me a call. I'm at 844-565-5665, or just look at the press release, and you can shoot me an email or Bill Miller an email, and we'll be happy to answer any of your questions or meet face-to-face. We'll be at all the investor conferences that are coming up. And
don't forget to mention your website and your stock symbol.
Our website, of course, it's www.atlas.com. And as a reminder, we are traded under the symbol ATLT, Apple Tom, Larry Tom.
Great. Harry, thanks for spending your time with us. And
thank you.
I'm glad to have you ahead on the spear tip on this trend of businesses coming back to the United States.
It's amazing. It really is amazing. Well, thank you very much. I really love the opportunity. I'd love to come back.
You're welcome. Harry Tayjar, Atlas Technology, atlastechintl.com, and stock symbol ATLT. The segment is brought to you by Tycon Partners.